So we've been surveying the China M&A for the first 6 months of 2015, and the real headline figure, the value of that M&A rose to $352 billion US dollars, which is an increase of 57% on a previous period, which was itself a record. So absolutely a new record level of M&A in China. A lot of that is being driven by very, very strong domestic M&A market, domestic M&A activity, and also increasingly, in fact, private equity activity. So your domestic strategic M&A, that went up by 60%. Your private equity activity went up by 67%. So some quite strong drivers in each of those two sectors, leading to this overall, very, very strong growth in China M&A in the first 6 months of this year. The private equity M&A market in China is quite heavily influenced actually by what's happening in the equity capital markets in China. And in that first 6 months, it seems a bit strange to say it now, as the equity markets, a lot of turbulence in China at the moment. But in the first 6 months of 2015, those equity markets were very strong, the A-share markets were very strong. And what we saw then actually was the re-emergence, and we'd seen it for about 12 months now, was the re-emergence of renminbi-denominated PE, domestic private equity, with a view to eventual exit on, or even short-term exit on the A-share market. So a lot of activity around A-share companies, around A-share IPOs in the private equity industry, and it was favouring renminbi investors. And actually it became a little bit of a tough time for some of the foreign PEs because they became less competitive as the A-share markets really opened up as an exit opportunity for private equities. As that starts to then turn around and the A-share markets again closing up, the dynamic changes again. The markets close, sometimes it has a dampening effect on transactional activity, but actually could be an opportunity for PE, because PE is an alternative source of equity for Chinese companies, or an alternative source of liquidity for Chinese entrepreneurs. So when the A-share markets close, in some ways that can be negative to M&A activity, but for some of the PEs it represents an opportunity because they're an alternative source of capital. As we look forward into the next 6 months, I actually think the level of M&A activity will slow a little bit compared to the first half of the year. And I think the reason for that is because of the turbulence in the A-share markets that we talked about. A lot of that transactional activity in the first half of the year was driven by A-share listed companies benefiting from strong share prices, benefiting from high multiples. And so you saw quite a lot of transactional activity around that. As those prices come down, as those multiples come down, our experience suggests that the M&A will soften also. So a slightly slower second half of the year than the first half of the year. But for the year as a whole, because we're so far ahead, I think, at the half year, we do expect to see strong growth. And the fundamental underlying growth drivers remain. The sector consolidation, the SOE reform, the very active private equity industry. Outbound will continue to grow very, very strongly. So a lot of these kind of fundamental underlying drivers remain strong, and the turbulence in the A-share market, I think, will take some of the froth off it and have a slightly slower second half, but overall I think a very, very strong year and a record year in 2015.